chair was in Chicago yesterday. He said a number of things and was asked about the idea of a Fed put, to which he said, quote, "I'm going to say no with an explanation." And he gave an explanation. But he was blunt about the president's trade war. He said much higher tariffs than they expected, higher than Smoot-Hawley. He said will lead to higher inflation and slower growth. He used the word persistent when talking about what inflation is going to do. To which the president weighed in today on Truth Social, to which he said, quote, "Termination can't come fast enough, that the Fed is too late and wrong, and he's urging Powell to cut rates." Megan Cassella, within the last hour or so, reported from a White House official that that post should not be seen as a threat to fire Powell. To which we bring in our senior economics correspondent, Steve Leisman, to weigh in on this battle royal. It's pretty clear to me at this point, based on the comments of Powell himself, forget the president's stuff on social this morning for a moment, just Powell alone yesterday, that if he thinks there's an issue with current policy, it's the president's policy, not the Fed's. And I think he was making that point fairly clear yesterday without being so explicit to call out anybody. He was just telling it like he sees it, making the case that, well, bigger than expected tariffs, maybe more persistent inflation than we first thought, and it's anyone's guess where all this is going.
Yeah.
And we're not the ones who did it.
I think that's clear, and I don't think he's shy about saying that his problem with figuring out what to do with policy is the tariffs and to some extent the other things that the president is tinkering with relative to fiscal policy, deregulation, as well as immigration is an issue we maybe don't talk enough about when it comes to the overall economic outlook. So all those things are in play, and they're saying, look, I got to figure out what all this means. I have a job to do. Part of my job is making sure unemployment doesn't go up. Well, it's at or near essentially maximum employment at 4.2% unemployment. My inflation rate is running higher than I want it to. I just had a big bout of inflation, and you're raising prices on things. So it's not it's not rocket science to say, I got to pause to wait to see what happens.
Right. And then there was this report earlier that the Treasury Secretary had been telling, or is telling, White House officials, like, okay, the market is going to have a problem if you actually fire the Fed chair. And the bond market has been the point of pain and concern in this whole thing.
Right.
To this point. And they don't want, the Treasury Secretary being the principal doesn't want a larger issue beyond worried about tariff stuff with having to think about the idea of the president firing, or at least attempting to fire the Fed chair.
I don't know that there's any actual limit to the number of fights that President Trump wants to have at any one time. It appears to be an infinite number.
It's his prerogative.
75 trade negotiations going on. He has fights with all the universities. So I don't know. And he has multiple court cases now. So maybe he wants to have this fight with the Fed. But I think what Besson is saying, Mr. President, of all the things that you're on your plate right now and all the things that markets worry about, you don't need to have a problem with the Fed, in part, Scott, because Powell is not saying I won't cut. I think Powell would like to cut. I think Powell's a little more dovish than some people on his committee.
Like Waller.
Well, Waller's more dovish, I think. We can have that debate, but I think Waller's...
No, I mean he's more dovish.
Waller's more dovish, right. But I think there are people on his committee like Musalem, maybe Hammack, depends. Some people have talked about the idea of needing to raise rates. He's not talking about that. I think he wants to cut. I just don't think he has essentially the license or the clearing to cut until you figure out what happens with inflation here. So it's a reason I think the market is a little out ahead of itself and banking on and hoping for a June cut. And there's another debate to have, which is what good would cutting do? If you have a supply shock to the economy, do you really want to goose aggregate demand, which is what rate cuts do, which we found out not all that long ago makes the inflationary effects of the supply shock worse.
I know the other side of this whole thing,
it's like, duh, did we really not understand that?
There is a belief, and people on the street are talking about it, like Wolf Research today, about the Fed, the risk of the Fed being behind the curve. You know why they have the phrase behind the curve? Because the Fed's been behind the curve before. And people worry that they are going to be again. I mean, it's a legitimate thought.
Which curve are they going to be behind? The one of rising inflation or the one of declining growth?
I don't know. Misreading one at the expense of the other.
I didn't read the Wolf report.
But maybe it is not understanding fully that inflation is coming down. The greater risk at this point is the labor market.
Okay, from what do you take that full understanding?
You don't think inflation is coming down?
Well, because we've been through this before, and there is some model with which to understand the future here.
I know, but the Fed chair's own words up to yesterday were transitory again regarding tariff inflation. They've used the word He thought or thinks now that these tariff inflation issues are temporary. He used the word transitory.
Yeah, but he's been wrong in the past.
I don't think that's what he's saying now.
No. I'm saying, like, what was it, 2 weeks ago he used the word transitory?
He said it could be transitory, but you have to go. 2 weeks ago he said it's the Fed's obligation to ensure that one-time price hikes from tariffs do not become secondary or embedded or more widespread tariffs. That was their base case at the time. That is the operative phrase for how the Fed is running policy right now. Making sure, given that unemployment is well contained, growth is good, jobless claims are low, you do not have an obvious worry right now on the unemployment side of the mandate. You take care of the inflation side of the mandate, which is the one that is obviously clearly under threat right now.
The point is that they may have a faster evolving problem on the labor side of the mandate.
They may.
And they may be behind the curve.
They may, but we just heard that the tariffs are a tailwind for growth.
Can I jump in?
They're a headwind.
Can I jump in as a market participant? Because I'll tell you what the markets want is no surprise. All right, I'm looking at the Fed futures curve right now. All right, we're projecting the first cut in June. I'm not saying either one of you is right or wrong. I'm saying as a market participant, the worst thing in the world is to now move a rate cut up from there because the market's going to freak. The market's going to say something is really amiss, and the Fed's got it.
Josh wants to get in. Josh?
Yeah, I think I'm going to take both sides here. I'm going to say. I'm going to say Powell's going to be doing more cuts in the second half of this year than he thinks he is. And he's already he's spent his entire tenure telling us that the Fed is data dependent. So it's not his fault that he has no idea what he's about to do.
Hey,
he has
Josh,
to wait for the data.
Hang on one second. Forgive me, but I'm going to go back to the White House because Megan Casella has more from there on what the president's saying in the room that we showed you a little while ago with breaking news. Megan?
Hey, Scott, absolutely. So that was a surprise press appearance in that lunch. Didn't previously think that we were going to be able to see that. But the president was asked a few questions there, mostly on trade, the headlines to bring you. He was projecting confidence, really. He said that we will have a deal with China on trade, although he hadn't answered an earlier question about whether he had been in touch with President Xi. So as far as we know, those two leaders still aren't speaking. Looks a little dicey between the two countries right now, but the president projecting confidence, saying we will have a deal with China. EU trade talks have also not been going especially well. We heard earlier this week that the EU thinks this has to be a two-way street and that the U.S. hasn't been offering enough. But the president and the Italian Prime Minister Meloni, who's here for a visit, both projecting confidence on that deal as well. The president saying he is very confident he will be able to make a deal with the EU. Now, I will say, Scott, both those, the China and the EU deals, seen as sort of the ones that aren't going as well, even as negotiations are progressing with countries like Vietnam, Canada, Mexico, you name it. The EU and China are both the two that have been talking more about retaliation and pushing back. So interesting now that the president is projecting this confidence. I'll also say, though, that I've been waved off the idea by White House officials this morning that we're likely to see any sort of trade deal with the EU announced today, that the Italian Prime Minister, I've been told, is not exactly the right person to talk to when you think about EU trade and broader trade talks for the bloc. But she is a very close ally of the president. They're seen as two both far-right candidates, you could say, and have some kindred spirits there, if you will. So something of a liaison with the broader EU, but that this meeting had been scheduled before the reciprocal tariffs were announced, so it's not expected to be a focus of the meeting today. Scott?
All right. Megan, thank you for the update. Come back with anything else you learned from inside the White House. Megan Casella joining us there. All right, Josh.
I'm going to follow up. If they make a deal with China and or with the EU, the Fed will be clear to cut. Boom. That's the kind of thing that would provide the kind of certainty that Powell needs to say, okay, here are the tariffs, here's the inflationary effect. I'm sorry, I don't want to cut off Josh.
But don't we believe, I'm going to go back to Josh in a second.
Yeah.
Don't we believe we're eventually going to have a deal? What do you think, we're never going to have a deal? You don't think we're going to ever have a deal?
I mean,
It's a question, I think, more so at this point of what have you damaged along the way to get to the deal? What impact have you done to the economy in the process of getting to that deal?
and however long it
Maybe
takes.
I'm being overly optimistic and thinking we're going to have a deal, but I mean, I feel like we're going to have some kind of deal at some point.
But that's the thing, right? What's the point that we get to a deal? The longer it goes on, the more damage is done. So
that's part of that's
what he said.
issue.
That's the hard part, though.
That's
is it 2 weeks?
That's
is
what
it a year?
potentially Chair Powell's going to be left to,
right. You can't
pick
guess
through.
to that.
Josh?
The market is no longer worried about whether or not we're going to have a deal. Of course we're going to have a deal. Donald Trump's rating on the economy last week just hit its lowest level ever. Not his rating period, not his rating on immigration, not his rating on how he talks. His rating on the economy hit the lowest level ever. Of course there's a deal. Everybody knows there's a deal. If we didn't think there was a deal, the S&P would be at 15 times earnings, would be at 3,800 right now. So what we're really talking about is the damage done anyway? Does it no longer matter? Because this all started at record high earnings, record low unemployment. It's hard to picture us getting those two things back to where they were just in February. And I'm going to tell you right now, he doesn't have to get rid of Powell. He doesn't. It's unnecessary. Kevin Warsh is the Fed chair in waiting. Everybody knows this. He was almost the Fed chair in 2017. Just so people understand, Kevin Warsh was on the Fed from 2006 to 2011. He's married to Jane Lauder. Jane Lauder is Ron Lauder's daughter of Estee Lauder. That's Donald Trump's best friend. What he wants in this role is a loyalist who will do exactly what he thinks needs to be done. And I actually think Trump is right. This economy is not a 4.5% Fed funds rate economy. It just isn't. And I think this business with the 10-year last week and capital flight and blah, 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 I think it's a huge head fake. I think rates need to be lower. I think financial conditions are too tight. And I worry, Scott, like you do, that the damage is already done. It's now 4 weeks of incredible uncertainty. It almost might not matter. They'll make a deal. The NASDAQ will rally 6%. Then what? Now you're still facing potentially a cyclical recession.
Steve, I got to take a break, but I'll give you the last word on all this.
I hope you guys are right that there is a deal. It's a good deal for the U.S. economy. I think that the idea that onshoring is a tailwind for GDP is very suspect to me. It requires you to believe that American companies have made the least efficient, least profitable choice with where to source their products.
But don't you think onshoring of chips alone is good for GDP?
Onshoring of chips makes a lot of sense from national security.
I'm primarily talking about that. I'm not talking about T-shirts and sneakers.
But if you look at what's been tariffed right now, all the inputs have a tariff on them, things that it makes no sense for us to buy that will make the economy much less efficient and make companies much less profitable. That has to be said 100 times.
Okay. Thank you for being here at the New York Stock Exchange. 101 times. Up next, our chart of the day. It is United Health for obvious reasons today. Steve Weiss owns it. He's standing by to tell you what he's doing with it today. We do have more moves from the committee. We're back right after this break.